Okay, everybody, it's the top of the hour, and we're going to get started with this webinar, which is about the idea of tokenization, particularly in enterprise settings. And I want to start off by just saying that this webinar is brought to you by Hedera, an EVM compatible open source public ledger for enterprises. Today, we are going to be talking about the idea of tokenizing assets, one of the big use cases for blockchain. My name is David Berlind. I am the editor-in-chief of Blockchain Journal. Blockchain Journal is a one-stop shop for enterprises who are trying to find out more about how blockchain applies to them, how they can use it to either drive new business outcomes or replatform existing applications to create improved business outcomes. And there's also a lot of information there about what other enterprises are already doing with blockchain. Joining me today is Duncan Moir. He is the Senior Investment Manager at abrdn, a global investment company based in the UK, and he is also the leader of their digital assets strategy. Duncan, thank you very much for joining me today on this webinar.
Thank you for having me, David.
Yeah, it's great to have you. So before we get started, I think it would be helpful for everybody who's listening in to understand a little bit about abrdn itself. What is abrdn and how big is the company?
Yeah, absolutely. So abrdn is a global investment firm. We're headquartered in Scotland, in Edinburgh, in Scotland, but we operate out of 39 locations globally. We manage about just over $600 billion for institutional investors, so pension funds, insurance, etc., right down to individual investors. And we have some of the leading platforms in the United Kingdom for direct to consumer and to advisor.
Okay, and so recently you started getting into this idea of tokenization. Tokenization is one of those big use cases that a lot of people talk about when it comes to blockchain. Sometimes I like to say that in order to really understand blockchain, you not only need to have a little bit of a technology background, but you need a PhD in international finance. You're working at a financial firm. So let's talk a little bit about what tokenization is.
Yeah, I guess in its broadest sense, it's about taking ownership rights of something, let's say an asset, and moving that into digital form, a digital unit or a token on a blockchain. That's a fairly broad definition, but you can think of it like having anything where the books and records are centrally or independently stored, like they are for most assets in the world today. And in some cases, you have multiple different copies of that, and then going and representing that on one single source of truth, one single ledger.
Okay, so today, as you pointed out, those assets may be represented on multiple things like a ledger, multiple places where those records are kept. What's the advantage of moving them? And when you say move them, are you eliminating the original multiple sources that this information was stored on previously and just going straight to this public ledger as a single source of truth, or are you running them simultaneous to each other?
Yeah.
How do you have it set up?
So we see it both ways.
Mhm.
There's definitely a phased approach where the world, if you want to have people talk about tokenizing the world, well, the world exists today, so you have the assets today, so you can take existing assets with the books and records sit today and create digital representations of them. And then you can get a lot of benefits from moving those digital representations around. Or we can create completely new assets where there is only a digital representation. So if I take an Apple share of Apple today, I can hold it in a custody account and I can create a token on Apple. And now that token can be transferred between investors. Or I could or Apple could issue a completely native digital token. And I think that's where we'll see things going.
Hmm.
But today, most people's efforts are around the former, and regardless, there are a huge number of benefits for investors. So, you know, let's just take very simply, if we move something on chain, and there's only one source of kind of truth now for that asset, well, you're on a new modern technology that is very streamlined. You have huge amount of operational efficiencies to be gained. In the old world, the traditional, let's say in finance, I'm concerned with financial assets. You have lots of different service providers, stakeholders who have got their own books and records, lots of different manual processes for reconciliation of that. Now we move the asset on chain, and those processes either don't need to exist at all because a lot of them relate to trust, and we trust what's on chain, or if they do need to take place, they can take place, let's say, within smart contracts. So that's just one advantage, which is operational efficiency. But there are huge benefits to individual investors. We talk about democratization of finance, and huge benefits to the large investors as well.
Well, let's just go back to the example that you cited, which is, let's say there's a share of Apple,
Mhm.
and let's say either you as the custodian of that share of Apple or Apple themselves decides to take a share of Apple and represent it as a token on a blockchain. I mean, that's
Mhm.
essentially that's the basic architecture we're talking about here,
Yeah,
right?
yeah.
So if I try to, because I am not a finance expert, but if I try to put what you just described into layman's terms, what this means is that if I go to my stockbroker and I want to buy that share of Apple, previously I would say to the stockbroker, could you please buy one share of Apple? They would go out and negotiate that for me at some price, and then they are essentially the custodian of that share on my behalf. Is that correct? That's
In
basically.
in most cases, for an individual investor, yeah, your broker would then hold that
Right.
for
So,
you.
so that's what we talk about when we use this word custody or custodian.
Yeah.
In some future version of this, if we take that whole workflow and we tokenize it, now um, the token sort of represents that share, and whatever happens to the token on whatever blockchain it's on, that is essentially representing how that share is being moved around. So if, let's say, it's now a token, and I am the custodian of that token, you can buy that token from me, and when you buy that token from me, you essentially are acquiring that share. Is that correct?
That's right. So that would be like a peer-to-peer transaction, which
Mm-hmm.
if you can imagine is kind of like what almost DEXs or AMMs are trying to achieve. But the benefits are just in that one simple example. The benefits go beyond that because okay, today across most large cap stocks, fractionalization of shares is a thing already. So some stocks are expensive just to buy a single equity can be expensive depending on the share or on the company. Uh,
Mm-hmm.
but when you go to sell your Apple share in the existing world today, you're going to wait 2 days to get your money back. The 2 day
Well,
settlement.
there's two concepts there. Let's kind of break those apart.
Mm,
One is the time it takes for the deal to settle, like the
mm,
2 days. But the other, which you mentioned, which we need to dig into a little bit, is you talked about fractionalization. And
yeah.
so let's talk about that a little bit. Today, when I go to my broker and I buy a share of Apple, the broker cannot divide that share into any fractions and mete them out to other clients. Like, that's my share. I have no option to buy a piece of that share. I have to buy the whole share. Are you implying that with fractionalization, we can take these shares and divvy them up even more into so that multiple investors can get involved in one share?
Absolutely. I mean, I guess just to clarify, you can get fractional shares in equities today with a lot of the larger cap brokers will offer that.
Mm-hmm.
But it's more expensive. It's not just take an Apple share and cut it into pieces. It is more expensive. There's a premium to doing that. But with tokenization, you can do that on any asset.
So
So
you fractionalize anything. You could fractionalize a building if you wanted to. You could take a
uh,
skyscraper
the,
and fraction.
the most popular example talking about tokenization is real estate because it's so easy to conceptualize. I own this brick and that brick and that brick. It's actually probably one of the hardest ones to do by mile, and probably one of the asset classes that will be later down in the journey of tokenization. But yeah, it's exactly like that.
Okay, so we talked about tokenization, we talked about fractionalization, we talked about the efficiencies that this brings. I want to come back to that second component that you talked about, which is the time it takes. Like if we go ahead and we buy that share of Apple in the old way, it
Yeah.
takes like 2 days before that share of Apple actually shows up on my brokerage statement. What is it about tokenization that makes it show up sooner or later than that?
Yeah. So today, equities and a lot of other assets take or T+2, is it 2 days after your valuation date to get your money back. The US is moving to T+1, but it's still not instant. When you transact on a blockchain, it is instant. I mean, to the degree that down to how fast the finality is on that blockchain. So in most, it's a matter of seconds. In some, clearly, it's whether it's on Bitcoin or Ethereum, it can be minutes. But it is instant, effectively, versus the traditional world. And why does that matter? Well, if you're in the financial world, there's borrowing things like regulatory capital against liabilities you have that you have to put down. But if you're just an individual investor wanting to make a trade, you want your money back straight away because you want to go and put it to work somewhere else. At minimum, you want it to earn interest on cash. So you
Mm-hmm.
want to have that. You want to have that money back. That is possible with tokenization when the two, say, sources of the two values, the asset, the Apple share, the tokenized Apple share you're selling, is then transferred into some cash asset or another asset. Maybe it could be Apple versus Vodafone here or something like
Mm-hmm.
that.
You mentioned that it's nearly instantaneous. A lot of different blockchains out there talk about how they are faster than the other guy. Some of them settle in seconds, some of them in minutes, some of them maybe in hours. But relative to the time it normally takes, all of these are virtually
Oh,
instantaneous, right? That's really the point you're trying to make here.
yeah, completely. The one exception might be if you're talking about payments,
Hmm.
just pure payments. And obviously, if you do like a Visa, they can do, say, 24,000 transactions per second. The actual settlement in those can be much longer. Most banks nowadays allow you to settle small transactions instantly, and they take that on that risk.
Hmm.
But in securities, I mean, even if you did it in an hour, it's better than
For
everything
sure. So,
else.
so it introduces some efficiencies, and I'm assuming that some of these time savings matter in a global scenario more than they might matter in some domestic scenario. Is that the case? Like cross border.
Yes, because of the usually with banking systems, within countries, the money can transfer
Hmm.
much quicker. Absolutely, and they say time is money, right? So literally, time is money. Yeah.
Okay, so Aberdeen is tokenizing funds, as I understand it. Can you tokenize an entire fund, or you went back? You sort of talked about how you could take um, existing things and tokenize them, or you can start from scratch with a tokenized fund. Are you doing both of those? Are you launching fully tokenized funds? Are you tokenizing existing funds? What exactly is
Yeah.
Aberdeen doing?
Yeah, so today we're doing we're doing the former. We're tokenizing existing funds or parts of existing funds, or creating the ability for investors to buy in token form. So parts of ownership of our funds exist on blockchain or on a DLT today, but this is a multi-year story, maybe a decade-long story, and things will evolve over time as they do with anything, and we will adapt as we need to. So, we've been working on this for a number of years, so it's not just been straight away. But now we're at the point of bringing offerings to market in token form.
When you do something like tokenize a fund, do you sort of set up the whole fund as one token and fractionalize that, or do you set up the fund as like sort of like the way a company going public would describe a certain number of shares that they're bringing public?
Exactly like that. So you if it's a fund that has low minimum investment size, let's say it's a typical regulated fund, maybe you need $1,000, $2,000 to invest, you might do one token to one typical unit. That might be the size. Of course, you could bring it right down to one token is $1. You might want to do that for various reasons. You might want to move into frontier markets that are massively underserved in terms of access to financial products, access to the ability to save money properly, and so you might want to bring the size down. But certainly for private markets funds, it's like private equity, venture, infrastructure, etc., private debt, hedge funds, the minimum ticket sizes are usually much larger, millions of dollars, and you want to fractionalize that and bring into multiple and many tokens, so that the smaller bite size, to allow more investors, different types of investors, into these products.
We keep talking about tokenization. This is one of the things that I always kind of wrestle with, which is when I look at various blockchains out there, they have their protocol token, the token that makes the chain tick. You think about Ethereum, that's ETH. If you think about Bitcoin, it's Bitcoin itself. When you tokenize something, a financial instrument of this nature, what kind of token are you using? Are you using a fungible token, a non-fungible token? Are you creating your own token to do this? Go ahead.
Yeah, so I mean, the answer is it really depends. So in the majority of cases, it's going to be a fungible token. It's more cost effective that way, but also in, let's say, a typical fund that only has a management fee, an investor goes into a fund, they pay a fee to the investment manager for managing that. A fund that has a management fee, every share in it is fungible. There's no difference between any share. Now, let's say you're going into a hedge fund that has a performance fee, a carry element to it, or a private equity fund where there's a drawdown component. That's where you now need to think about non-fungible tokens, because each investor will have a different level of carry to pay to the investment manager in that hedge fund. So that's where you need to pick the token format that's correct for the asset that you're tokenizing.
I see. So it's not one or the other. It depends on the use case. And when you're picking, let's say, a fungible token, is abrdn minting its own token to represent these funds and the fractions, or are you using existing tokens that are already out there on the current blockchains?
No, so we work with, generally speaking, we work with partners on this. We know what we're good at, and the things that we're not as good at. We recognize expertise externally. We're providing the content, and we've got the investor base. So we tend to work with, in the UK, Archax, an FCA regulated venue. that Aberdeen's the largest external shareholder in, they tokenized the investments in some funds of ours. Recently, we worked very closely with Toko. So any Hedera fans will be very, very familiar with Toko, and prepared again to as well to work with others on different use cases.
I see. We talked about real estate. In your personal and professional opinion, what are the different classes of assets besides real estate and financial instruments that are candidates for tokenization? I'm talking about, what's the future here in terms of blockchain and this big use case of tokenization? Is it really as big as some people say it is? Is the whole world going to get tokenized, or are there only certain industries where it matters?
Okay, so I mean, just I guess finishing off financial services, it's just massive, the opportunity. And I think we talked a little bit about the benefits in equities, but equities is probably the one where stocks are the one where you're not as bothered about, but there are definitely benefits. The bond market is massive. Individual investors do not have access to corporate bonds in their portfolio, individual corporate bonds. We've got to fix that. We've got to give them access. Otherwise, the bond market is not reaching enough of a wide enough audience. All the different private markets, right down to niche alternative investments as well. Watches, art, cars. We're already seeing this happen. Outside of financials, sorry. Yeah.
Yeah. We'll just stopping there for a minute. Aberdeen's getting into it. Well, how? You said you manage something like, you have something like 600 billion pounds or dollars. I don't remember which one it was, under management. How much of that is tokenized so far, or how much of that's going to be tokenized in this first year?
That's a good question. So far, our checks tokenized investments in our money market funds this year. I guess totaling them up, those funds are probably well over $20 billion. And the amount that you can say that's tokenized will depend on how much we get in inflows. But we've seen the interest has been absolutely massive. And we're not surprised about that, because money markets is something that really there's real demand for, because of the yield component, and as a safe haven type asset. It's hard.
The reason I asked that question was because I'm trying to get an idea of the size of this particular commitment that Aberdeen's making to tokenization. You mentioned how massive the opportunity is in the financial sector, and to my knowledge, I mean, we are watching all the enterprises that are out there, blockchain journalists, see what they're doing with blockchain. And there certainly is activity out there in the area of tokenization. You see JP Morgan doing some stuff with its Onyx project. We saw just recently the Monetary Authority of Singapore complete a massive pilot with a bunch of other investment companies. Of course, there's you, but this is not going mainstream as far as I can tell, at least not yet. If the opportunity is that massive, how come we don't hear every single investment company out there jumping on it?
Yeah. So I can kind of speak from our experience, and I think a lot of our peers will be in a similar position. Is most of our businesses have been around for a long time. We're nearly 200 years old, and so we think very long term. And we are, I would say, cautious about moving into new areas. So there's been, we've been working on this for now well over 3 years. So it's taken us that long. We want to make sure we understand there's an education element that needs to come with it, and the market infrastructure needs to pick up. The regulatory changes as well help. I do think that there's been this whole the institutions are coming kind of thing for a little while, and frustratingly, it's not kind of come to fruition, or there's a lot of real world examples. There's a lot of proof of concept, but not real live examples. But I can tell you that now more than ever, the kind of the buzz is there. More and more people are talking about this. Every one of our peers is looking at this. Either they're looking at it to learn now, or they're already involved in live projects. So it takes time. And if you go and do a security token on a regulated fund, you need to go through the regulators.
Yes.
And those regulators on a plain vanilla fund might take 6 to 9 months, 12 months sometimes to approve a fund. So you just have to go with the flow as it relates to the kind of old traditional markets as well. We can't all move at the pace of blockchain, I suppose.
Okay, I want to come back to what other industries this applies to, and then I want to talk about the business outcomes, because it sounds to me like maybe Aberdeen had a little bit of first mover advantage here. It was looking at this like 3 years ago. There's a lot of time that's baked into just doing something like this, as you mentioned, getting the regulators on board for every fund you go public with or something like that. So by starting so early, maybe you have a head start compared to some of your competitors. I want to come back to that as a possible business outcome, but I want to talk about other business outcomes. But first, I just want to get this one little piece out of the way, which is what other industries besides finance and real estate, as you described, does tokenization apply to?
I guess, well, technically, and any industry where there's sensitive data or data that you need to trust can and should be represented as tokens on chain. So the ones at the top of my head are healthcare, patient data. You can bring in things like zero knowledge proof to like ensure that only certain people who should have access can get access to that data. And we see all these data breaches across private and public healthcare systems. Supply chain tracking within industrials, within consumer goods. This is data that it can be represented as tokens on chain, and a company can track the entire supply chain of its products, can track things like carbon footprint, as there's Atma.io are doing. They can look at where the products were made, the production facilities. They can find breaks in the production line. Really absolutely, any industries where digital identity is important. Certification for within oil and gas industries, compliance certifications for employees or even for the machinery. It's very, very wide ranging.
This all
it's
rolls
hard to
up
find
to
one that doesn't.
Yeah, this all rolls up to something I like to talk about. One of my favorite topics with blockchain, especially public blockchains, is this idea of multi-party transparency. Anywhere where you have a need for multiple parties to access data, and you want a single source of truth, a trusted source of truth, that data, blockchain is possibly the solution to that problem of trust.
Yeah, absolutely.
Yeah. So let's talk about business outcomes. What does Aberdeen expect in the form of new business outcomes or improved business outcomes? Like, could be just saving money because of those efficiencies, and how's it going so far?
Yeah, so we definitely have plans to save money. We definitely have plans for operational efficiencies within the business, either in the investment funds that we run or just in our own processes. But as it relates specifically to kind of asset tokenization, what do we care about? We care about the client outcome first and foremost. So the goal is to create a better client outcome, and through tokenization, we're now able to offer a wider range of opportunities to our investors, or we will be able to offer a wider range of opportunities to our clients. And they're going to be able to allocate in a much more cost-effective manner. We're going to be able to bring operational costs down for them, operational friction. So there's a lot of benefits there. And it's not, I think maybe I mentioned at the start, it's not just about democratization. So that is absolutely important, democratization of finance. So this is about these opportunities going to investors who do not have them right now, giving them more power and more autonomy in managing their portfolio. But the assets have to come from somewhere. And so the asset owners today need to see the benefit of tokenizing their investments. And so there are benefits for them. These asset owners need to think about their public markets portfolios, which are liquid, versus their private market portfolios, which are illiquid.
But just going
And
back to the benefits you're describing for for investor outcomes, you are by offering those improved investor outcomes, those improved customer outcomes for your investors, you're creating loyalty, aren't you? I mean, you not only will make them more loyal to Aberdeen in terms of where they do their business, because these may not be uh, features that they can find elsewhere, but you're also potentially attracting new customers who would be interested in those features because they're not available anywhere else. And both of those would be really good for Aberdeen's business, no?
yeah, I mean, look, of course, we have a duty to our shareholder as well. And so if we can create these innovative solutions that create better client outcomes, we're going to be rewarded by greater client inflows, and ultimately that's good for the shareholder. So it's sort of it's a win-win. I mean, this is all about, this all comes down to efficiencies, and when you can create really good efficiencies, everyone can win at the same time.
Okay. You're the leader of Aberdeen's digital asset strategy. And there are many people like you at other organizations that have some input into the technology portfolio to support whatever application it is they're building. And I think of this as an application. Um, you talked about different blockchains that are out there and how, for example, they offer uh, a quicker time to settlement compared to existing financial rails. Uh, what are the criteria that you used in order to make your selections? Is it performance, reliability? Like what things should other people who are tuned into this webinar be thinking about when they have to make their technology selections?
So I guess anyone that's thinking about, or is building a business, and is presumably is building that, because they want that business and they want the business to be around for a long time. And I mentioned that we've been around for a very long time, and we want to continue to be around. So when we go into something new, we use a technology. We want to use a technology that's got longevity, that's got business continuity and sustainability. So that's like top level. That's the goal. And then we have to think about the different factors that would go into creating that. And that means that it's a technology that's got to be scalable, because we want to be successful. And if we're successful and a technology we're using is not scalable, well, either we may not achieve that success, or we might have to change technologies, and we don't want to do that. We like long-term partnerships. So it's got to be scalable, high capacity. Speed is important, absolutely. So the number of transactions that can be processed on chain, and the finality element as well. I mean, if the industry really does take off, that overall capacity, transactions, and finality will be very important. You don't want congestion in the network, and then we need a technology that matches our values as well. And I talked about business sustainability, but we also have very strong, some people say ESG, but sustainability values, climate and social and governance. And that last part is clearly very important to us. It's a technology where there's a strong governance framework that we think aligns with our own approach and the approach of the investors that we're going out to.
Very good. Okay, we've been going now for about 35 minutes. I'd like to open up the webinar to any questions that the different members of our audience may have. So why don't we pause here and look for some questions? I know that we have somebody who's moderating the webinar. I don't know if we can where we're going to take the questions.
I see a
I'm
Q&A up
looking in
there, so
yeah, I'm looking at the chat. So okay, here we are. So I see one question from a BD. Can you explain the property law surrounding tokenization? I've heard that if someone unlawfully takes possession of my token, the courts could assist in retrieving the token itself, but not the underlying asset. And it's not legally recognized as property. Is this accurate?
well, I'm not a lawyer. I'll have to start by saying that, and I think it
We left that
depends.
off. You have to be a
It
technology expert, a PhD in international finance, and a lawyer. But keep going.
Yeah, but it certainly depends jurisdiction by jurisdiction. Maybe I can talk loosely to the UK, where the UK jurisdictional task force confirmed that, and I think maybe the Law Society confirmed that assets can be represented legally on chain. However, today you cannot easily natively issue um, an asset,
Mhm.
a financial asset on chain in the UK. So I think
That's a regulatory obstacle, right? Is that what you're?
today, but it will change with there's a consultation now. So I think today that, like, for example, that question, that would be absolutely right. I think that's right. If you lose the I think maybe the question, I don't know if I've got it the wrong way around, but it was asking about the token itself. If you lose the token, do you still have the underlying asset?
Mm-hmm.
That would be the case. That would be the case in the UK today. But I think on other jurisdictions. I'm afraid I'm not the guy.
Mm-hmm. Well, whatever you do, don't lose a token, right? Which it's probably an important thing. Next question from Mats. Can I transfer my token that is a fragment of an Apple share or a fragment of a truck on my wallet in my phone directly to a wallet controlled by a person in the bar? The person in the bar then sends me X amount as either a payment. Is some form of escrow's smart contract needed to secure the transaction for both the party and the counterparty?
Wow, another technical one. So I mean, you shouldn't matter
Don't,
where you
don't,
are.
yeah,
Should
don't
maybe,
do business in a bar or like make sure you haven't consumed any alcohol before you start transact. Okay, but go ahead. Yeah.
so I mean, like I guess yes. In theory, this is exactly what should be. You know, wherever you are, you should be able to send this transaction. It's always gonna. There's a ton of variables that are going to impact that, such as
Mm-hmm.
does your wallet support the same chain that the asset is tokenized on? For example, if you're paying in a stable coin, let's say, or any other digital asset, actually any cryptocurrency, the transaction should be uh, immediate, and so escrow should not be needed for that. So yeah, in theory, this is exactly where it's supposed to be heading.
Okay. Um, Matt's also mentioned the idea of he was talking about he wanted to clarify. He was talking about Web3 wallets, and I think that was the assumption we made, which was that this would be
Yeah.
um, Web3 wallets. Okay, let's go on to Andrew, who wrote, "What is the number one asset class you would like to see tokenized tomorrow?" So if you
Uh,
woke up tomorrow morning and something was tokenized, what would it be?
okay. So it's a really boring, but I really think corporate bonds are the thing to do now.
Mm-hmm.
I think you're going to add a lot of value to an investor, to individual investors, and I think it's an industry or an asset class that needs it. So that's the one that I would like
What is a
to
corporate
see
bond?
tomorrow. Oh,
What's that?
it's a debt issued by a company. So
Right.
Apple issues shares, Apple issues bonds. So you're going to get paid. It's a completely different return stream. You're going to get paid a coupon by Apple for you're effectively lending them money.
Mm-hmm. One of the things that we saw happen within the last year was that Siemens, the German manufacturing giant, issued a 60 million euro bond and then fractionalized it and sold the fractions off to other banks like DZ Bank.
Yeah,
So is that what you're talking about there? That kind of bond where you're
yeah,
basically
exactly.
raising money? Yeah.
That exactly. That was more. That was a yeah. So that was a proof. More of like that was more of a proof of concept because I think they had the banks prearranged to buy, but it was a great, really great test case.
Hmm.
That's native issuance. So in theory, we could take all bonds that exist today and tokenize them. And the great thing about bonds is that they have well, generally speaking, they have a maturity. So they constantly need to be reissued, or companies need to raise new debt,
Hmm.
unlike equities, which can go into perpetuity. So it's really well placed for tokenization.
And when you said that was native, what I think what you meant was that like they didn't take an existing bond and tokenize it. They tokenized a new
I
bond
believe
from
so.
scratch.
For the
Yeah.
Siemens one, I think so. Yeah, I think maybe ABN AMRO or someone did that. Yeah.
Hmm. Let's see. Lynn Marler asks, did you get patents for the tokenized products that you offer? Which begs a question of whether any of this
But
is it can be patentable.
yeah, I don't know if I understand. Maybe I don't know if that's someone pitching a business idea, but no, we didn't. Like I said, in UK law, the assets can be represented on chain, so there's no additional patent for it.
Marcus asked, could you expand more on the tokenization of bonds? I think we just did that. I don't know if there's anything else you just want to add.
Well, the only thing I was saying, but maybe it's not clear, is because anyone that's not familiar with it, is when you go and buy an equity like a share, generally speaking, if you buy one share, like one stock, the price, and it's company dependent, but the price is quite low. So you can go out and buy one share, or as I said,
Mhm.
you can still buy fractional shares. But a corporate bond, the issuance, the minimum size could be hundreds of thousands of dollars for a single
Right. Well,
issuance. So it's out of reach for most people. So we can create tokens on that and then chop it into 250,000 $1 tokens, and now you can invest in a corporate bond. Today, if you want to buy corporate bonds, you've got to go buy like an ETF or a fund that's a basket of them.
right. So like, let's go back to the Siemens fund. I believe they fractionalized it into just four fractions. I don't know if they were equal, like 50 million euros each. But I guess one question I have is that you can imagine there was the five organizations were sitting in a room. The Siemens said, that's our token right there. So if you want to buy that, that's the one you're going to buy for 15 million euros to
Yeah.
the banks. The banks buy that. That's the primary market. We talk about sometimes we forget that when you're dealing with tokens, there's the primary market, which is whoever mints the token sells it to somebody else. That's the primary market. But then there's a secondary market where, let's say, DZ Bank takes that fraction that they bought, and then they turn around. Now they're free to sell it on the secondary market to anybody, right? So could they further fractionalize their fraction if they wanted to? Are they free to do that, or is it governed by how uh, Siemens minted the original token?
So that's a great question. I don't know about Siemens specifically, but if
Hmm.
I was going to do it that way, I would hold my token in custody and or in some wrapper and tokenize that entire wrapper. And yes, I could do it. And we this exists in the traditional world, by the way. They're called feeder funds. So very popular in hedge funds. You have a hedge fund that requires $10 million minimum investment. You create a feeder fund, you go and sell that to wealthy individuals at $10,000 a minimum investment. You aggregate all the assets, and then you go and invest into the main fund. And well, really, tokenization is almost doing that, but it's doing it far more efficiently. So that's the way I would do it if we wanted to do that. But to be clear, I mean, the Siemens example, it really was a pilot. So yes, everyone was in the room, everyone agreed, but it was a pilot to test the technology, and I think it was successful.
Okay, I'm going to move on to the next question from Dimitri. Uh, he asks, does it make sense for treasury bonds or any bonds leveraging blockchain tech for redeeming coupons trustlessly? without all the manual work from traditional institutions?
Yeah, I mean, treasuries, I think we already are seeing treasuries being tokenized. I think we're going to see more similar to with our money market funds. You want a safe haven asset that's got a yield.
Mhm.
Absolutely. Also, just that good point on coupons. Um, when you can like one of the big benefits of this is that instead of receiving coupons in cash and reinvesting, or you can't actually reinvest in it, you'd have to buy off secondary market. You can now be airdropped. If you think about it, if it's a token, you could be airdropped additional tokens
Mhm.
to represent the cash, the coupon part. So it can actually create. There's more efficiencies there, just removing some of, like, let's say, the human element or the processing that's needed.
Mhm. And so you see some central banks experimenting with that right now?
Actually, what you're more likely to see is people buying treasuries, holding it, and then tokenizing the ownership of those.
But would the central bank take any interest in doing that tokenization natively from the get-go?
Uh, well, most central banks are looking into it somehow,
Yeah.
in some way. That pretty much everybody's got projects, and you can see all the jobs that they've got posted for experts in the area. So yeah, at some point.
Samuel asks, uh, could you please explain what steps you needed to take for compliance at a high level? And I think, that's a big question. Like, what's the journey like when you're
Painful.
doing it's painful.
Painful. So
Yeah,
you've got
well,
to, yeah,
and maybe add a little bit of the kind of international component to that, because as you said, you're operating all over the world.
yeah,
Obviously, there are some jurisdictions where that are more crypto or blockchain friendly than other jurisdictions. I'm thinking of like Germany, where they're moving forward. It's obvious why Siemens and these other German banks are kind of doing things, because the regulatory climate's a little more friendly there than maybe in other places. Singapore,
yeah.
India, there are just definitely some jurisdictions where the regulatory climate is making it easier for companies like yours to experiment.
Yeah, definitely. There are absolutely some countries where it makes much more sense. So what are the things we had to consider? We had to consider what the assets were, where they were domiciled, that we were going to tokenize. So we had to think about what the regulator's view was of tokenization there, of blockchain.
Hmm.
We had to think about what venue the tokens were going to be available on, and what controls were going to be at that venue for, say, for KYC of clients buying. And then we had to think about what controls you can put in place on how that was then going to be distributed onward. So those are just some of the things, but that's just your more basic regulatory compliance. There was a whole nother thing around cybersecurity. As you can imagine, this is something that you don't usually have to think about with traditional funds. You definitely have to think about with say, digital tokens.
Okay. Another question, where will the first markets and trading of these assets be established? I'm assuming that's a geographical question, like where do you think this is going to take off
Well,
first?
ours are available today, so like, I think that's really a question of which markets are most forward thinking, or which regulators are most forward thinking
Hmm.
or ahead. Um, and where is the content? Where are the assets? Europe with Mica or Mika, depending,
Hmm.
I guess, of where you're from. Um, Looks to be slightly ahead there. Huge amount of content, huge amount of assets, huge amount of fund managers, and a good regulatory environment. I think the UK is really looking really solid. There's definitely some changes that need to be made to make things easier. There are changes happening. The consultations that are out are going in the right directions. You mentioned Singapore. They're very behind blockchain, and they've got their own pilots ongoing just now. And
Hmm.
the UAE is an obvious one where there's good regulation um, there. So, but
Didn't mention the U.S., of course, where
you know
we,
what? The thing about the US is, for finance, is just so huge. And I think what's clear to me is that there's the groups like us and our peers who are there and want to be there with this. And I think there's the demand as well from the consumers. It just needs that bit in the middle, the tiny insignificant bit about regulation, just needs to be ironed out.
Okay, well, Duncan, we are out of time, and there are more questions here than we have time to answer. And I apologize to everybody who's tuned in and didn't get their question answered here. So I'm going to ask you, where can they find Aberdeen, and where can they find you to ask for more input on what they're trying to learn?
Sure. So please reach out to me on LinkedIn, reach out to me on Twitter.
Mhm.
It's nothing special. It's just Duncan Moir. I'm on LinkedIn, and Duncan M Moir on Twitter, and that's probably the easiest channels to get me on.
Great. And Moir, for those of you who didn't see at the beginning, it's spelled Moir. So it's Duncan Moir, right?
Yeah, that's it.
Terrific. Well, we've been speaking with Duncan Moir. He is a senior investment manager at Aberdeen. He's also the leader of Aberdeen's digital investment strategy. Aberdeen is a 200-year-old company going right for it when it goes into the future with blockchain. They have over $600 billion under management in the form of financial assets. And this is a real example of an enterprise that is taking blockchain seriously with one of the bigger use cases that we describe as tokenization. I'm David Berlin, the editor-in-chief of Blockchain Journal. To find out more about what we do, you can go to blockchainjournal.com. And of course, you can reach me very easily at david.berlin@blockchainjournal.com if you have questions that you want me to pass along to Duncan. So thanks very much for joining us, and we'll see you on a future webinar.